Welcome back to another episode of the Anatomy of the Trade. Today we're going to discuss a trade that was made by Franz in DocuSign stock. All right, well, Franz, please explain to us what the trade is and what it is about.
Okay, well, good morning, Roman. DocuSign has been on my watch list for quite an extended period of time. One of the things, though, that turned out to be a mistake, which maybe we circle back to a little bit later, but I segregate my watch list by stocks that are in the top industry performing groups and stocks that are in the bottom industry performing groups, because as we know, that's industry group performance is a significant factor in how an individual stock does. And this particular stock was in a very pretty low perform. It was definitely in the bottom half. So that was probably my initial mistake. This chart doesn't show the previous uptrend, but there was a strong uptrend that entered into a kind of a sign of preliminary supply, and which we're kind of seeing there. Apologies for not including that, but then an obvious buying climax, automatic reaction, and then secondary test. So here we've got a nice trading range, and this has been a cause that's been building since last September. So quite a few months, pretty significant period of time. And so my analysis and what I've started to do, Roman, here is with the significant bar idea that you've been teaching, is to kind of try to show with the green bars going across and the red bars going across where the significant buying has occurred and where the significant selling has been occurring. And that kind of helps explain that. So you can see that after the initial test, the price really didn't come all the way back down to the low of the trading range, which I thought was encouraging at the time, and then kind of rallied up and was able to sustain itself in the upper half, at least, of this trading range for a period. So I read that as bullish. And then in mid-February, you can see that sell-off that again took us down, but didn't exceed the lows of the trading range that was made way back in September. So I thought, well, potentially that's a second point of fear that we're looking at here. That could be this could be phase C, and I was waiting for a test. And you can see there my first point of entry on March 17th was after the initial attempt to, and there was a nice reversal bar after that sort of spring-like action that you can see there. So that was my initial entry. It went back down and attempted to spring again. And I thought, well, these are just probe positions, by the way. I'm not going in any big way. I'm just kind of trying to get my feet wet, especially since this was in a lower performing industry group. But after the second kind of test of that first, what I thought was phase C, and the attempt to begin to go back up again, I thought, well, I'll put a little bit more on. And on about looks like about April the 13th there, I was pretty encouraged because there's a nice, nice initial kind of significant bar to the upside with a little bit of pickup in volume. So I'm thinking, hey, well, this is looking okay. And at that point, I'd raised my stop loss from where I'd originally gotten in, which my initial stop loss was about 177. I moved it up to 186. And then I moved it up after that significant bar up to 199, just kept it there. And you can see that there was an attempt to kind of break through at about 220, 235. Another attempt, and that second attempt was a dead giveaway that this isn't going anywhere. So possible mistake would have been not to get out I was looking at this. This was to be a a long fundamental long. Well, if I get taken out, my stop's going to take me out. I don't have a big position. By raising the stop, my risk was minimal to my overall portfolio. And sure enough, yesterday, the 5th, bang, we're done. And I think that's pretty much the story. So I'm sure you can add a lot to my analysis, but that's the way I was looking at it.
Okay. Well, I think it's somewhat difficult spot. I mean, I was caught up in some of this type of, you know, uh, looking like phase C testing, taking off, and then collapsing. So this has been a very, very common theme in April, beginning of May. So I think our conversation here should be all about, how do we deal with trades like this? When we get on the wrong side of the analysis, and what are the signs that would tell us that, we're wrong, and how to mitigate the risk much faster. So first of all, a definitive climactic run, right? And then we have a very extreme change of behavior. And it kind of almost like reminds me of the TP formation where there is a lot of supply coming in, and the CO is just basically like, get me out at any price on the way down. I don't care. Then they stop. And then the stop in action produces basically like the rest of the volume signature that is not that great. So CO is not necessarily participating here. And then there are some institutions that are selling after the CO. So they're recognizing that there is no performance after that selling by the CO. And again, it's really hard to identify. I was thinking actually here that there was some phase C based on a much longer trading range that we have had to the left. Did not enter this position here. But the next telling sign, if we're thinking that this is phase C here, what happens after phase C? So obviously a sign of strength. So with the sign of strength, we need to figure out what kind of character on the sign of strength would we have. We would usually have the rally that would have a lot of demand, continuation, breakouts, breakout above the climactic action, and we don't see that. We see how supply is coming in again at the point of the resistance, and then we have reaction, 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 reaction again. So at that point, you might be thinking, okay, well, this is definitely a character of phase B. So now it starts to finally make sense. A, B, and then we go into the final reaction into potential phase C. So from that point of view, I mean, structurally, if we're just thinking about the structure, I think we will be, attracted to this trade. We would be seeing this as Franz has said, attempt to spring test, and test is happening on a higher low and on diminishing supply character. So, these are the rules when you look at the structure. I think obviously one of the mistakes that we are making lately with this type of structures is that the relative strength has shown that it cannot be a leadership.
Right.
And I think that was the key.
Yep.
You can't just look at the structure. You have to look at the structure and how the group is behaving, how the stock is behaving. Having said this, I don't mind any type of probe trades that could lead to some kind of realization as to what the true bias is. So, for instance, I think this is probably was a little bit too premature to enter. Although I understand the logic here, this was like, this is the test. But it didn't really reverse. So this bar definitely much better entry. So if we're entering here and we are under the assumption that this is phase C, again, the logic is the same. The next thing that should come is a sign of strength. As we're going up, the first breakout is weak. The second breakout is weak. So here is our next clue as to the character of the sign of strength. And we're seeing that the breakouts are not that great.
Nope.
So from here, once we see the failures on the breakouts, then we want to see the failures to the downside. So here is our break of the support. So another failure. And this would be a much better exit. And then another failure, and this would be a much better exit. And then obviously this exit right here. So I think that's it. I think there is not a lot that I could add to this, Franz. So I would say that in my commentary, so under the selection, relative strength, and then I would say earlier exit. But everything else was done by the rules. With you use the stop loss, it was triggered. The test was identified correctly. The structure was there. So relative strength and just earlier exit. So what are your final thoughts on this trade?
I really think your point about how a sign of strength rally is supposed to behave, the sign of strength rally that occurs out of phase C, how it is supposed to behave, and obviously, one test, and here with this big red rectangle, which is just full of supply, this is where the battle is occurring between supply and demand, and immediately when you see that second reversal, I totally agree. I was just, with my stop loss, I was just thinking, well, maybe it won't get down to the support, and maybe, but wrong. Hope is not a strategy. So when you see that obvious behavior, it's clear that this is not a sign of strength rally. So ergo, it's not phase C, and at the very least, getting in too early, get out with a little bit of gain, and instead of with a little bit. But like I said, these were just pro positions anyway. It wasn't a huge, but a loss is a loss. You'd rather have a gain. So that's sort of what I have to say.
Okay. Well, let's go through the post analysis. So bias is
no.
Timing, I would say that maybe 50-50. I'm not really fond of this entry, but definitely this entry was really good. Okay. And by the way, somebody might say like, well, how's it that you're given 50-50 if the trade has failed? The idea here is that you have certain setups and you have to follow those. And structurally, this is a setup. Selection-wise, as we said, obviously we're not in the stock that is performing well. So, and that's why we have different, columns here. So character, probably no, right? I mean,
right, I'd say no.
Yeah. Point of entry again, 50-50. Stop loss, yes. Add-ons, well, we did the add-ons. Okay, and then exit, yes. So why am I saying exit, yes? Because we exited by the rules. This is where our stop loss was, and that was the exit. So with that, what do we have here? We have 4, right?
Yeah, 4 out of 7. So that's what,
Okay,
56,
57.
57, yeah.
Okay, well, what are your final thoughts here?
I think that your point about selection, and in fact, in my post analysis, I've even added a column for selection. So and I just didn't, so I would have given myself actually a no on that column as well. So my personal variance was even lower than 57. And your point about, hey, it's got to have good relative strength. It's got to be in an outperforming group. I knew that going ahead, going into this. I'd been stalking this stock for a while, and I kind of wanted to buy it. So I sort of ignored that rule. So shame on me.
All right. Well, good episode. This is a really good learning experience for us. That there are a couple of things working in this trade. First of all, the structure, but could we give a lot of weight to the structure itself on its own? And we kind of see from this trade that probably not. Probably we need to engage also into the relative strength and see where we are with that. With this, thank you so much, guys, for watching this episode, and until next week. Thank you, Franz.
Good lesson. Thanks, Roman.